Hi there, and welcome to the Stock Scores Market Minutes for October 17th, 2016. This week, I want to talk about what stops us from trading success. Perfection in trading just is not possible. The market is too complex. We are so far from perfect that it's very difficult to be perfect in trading. However, we should strive to be as good as we can be. And so, what I like to do, I actually do this daily, is to do some self analysis to identify what hinders my success. What I do each day, and if you're a day trader, this is appropriate. If you're a swing trader, perhaps once a week. If you're a position trader, perhaps once a month. What I do is I look at all the stocks that I should have bought using my strategy and what I should have done on the exit. Remember, I am a strategy trader. I've got very specific rules for when to buy, when to sell. So there's not a whole lot of room for interpretation. It's just if the rules were applied with perfection, what should I have made? And then I look at what I actually did. I look at the trades I missed. I look at the incorrect trades that I took. And I try to decide, why did that happen? Was it emotion? Was it my process that was at fault? Was it the rules of my strategy that were the problem? Now, my strategies are pretty consistent in terms of their profitability. So usually I don't worry too much about that. But oftentimes it's my process that allows or causes me to miss something. Or I get caught up in the emotion of a market that gaps down, and so I don't take trades that I should have. Are my tools at fault? My tools generally work pretty good, so that's not usually an area of fault for me, but that may be a source of problem for you. Is it risk management? Did I take too many big losses, or did I take a position that was not sized correctly given the rules of my strategy? Was I impulsive? Did I take a trade that didn't meet my rules because I got caught up in the emotion or the action of the market? Or was my focus the problem? Was I missing trades because I was doing something else and not focusing on what I should be? So these are just some of the areas of problem. Look at your trades, look at what you should be doing, look at what you're actually doing, and try to figure out what is the cause of the mistakes, and then come up with a plan to fix them. All right, let's get into this week's analysis. Here's a chart of the S&P 500 30-day 60-minute chart. There is the pattern that we had coming into this week, and you can see that we broke down early this week, and that, as you'll see in a moment, is an important breakdown. Now, we then had a gap down here, came back, but ultimately moved down again on Friday. And so this is looking fairly negative because we broke down out of this pennant pattern. Now, when we go to the weekly version, we see what that breakdown caused. We've talked about this for a while. But there's our upward trend line, and we actually have broken that this week. So this week's weekly chart has a break, not a strong break, because we did manage to come back from the weakness on Thursday, but a break nonetheless, and that is a bearish signal. So I want you to be very cautious with US stocks. It's not a lock that we're headed lower, because we did have a little bit of a comeback late in the week to try and hold that trend line, but we're definitely flirting with it. And I think you'll see why in a moment. The real issue is that interest rates are expected to go higher. Now, here is a chart of the IWM, which is the small caps. And there too, you can see a break of the upward trend line. Notice also that this high is lower than the highs of the summer, early summer. And so that is another sign of weakness and should lead to lower prices in the small caps. On the TSX side, we didn't see the same breakdown. We've managed to hold support on the TSX. We're also below resistance. We're basically stuck in a sideways range here, neutral chart in the short term. Long term, we came into this with an upward trend. We're now consolidating, building a sideways pattern until we break down through support or up through resistance. Hard to say what's going to happen. So for now, a neutral chart. On the TSX Venture, we broke the upward trend line a couple of weeks ago. We've been building falling tops ever since, largely because of the weakness in gold. I think we could see this make another leg down soon, so I suggest caution with the TSX Venture stocks. Here's one of the culprits, and one of the things I wanted everyone to notice. We talked about this last week. There is the upward trend line for treasuries, and we were flirting with it last week, much like stocks are doing this week, just kind of tickling through that trend line. But of course, on treasuries, we actually broke down through the trend line, a definite breakdown through the trend. That means treasuries should go down into here. What does that mean? Of course, if Treasury prices go up, that means interest rates are going down. Well, here we have Treasury prices going down, which means interest rates are going up. So the market beginning to price in a likely Fed interest rate raise, most likely in December when they actually have a press conference or that sort of thing following the meeting. Here is a chart of the US dollar, another good gauge of whether interest rates are going to go up, because if interest rates are going up in the US, that makes owning the dollar better. And there you see the strength in the US dollar getting through this little line of resistance. I expect the US dollar to continue higher up into here, and that another sign that there is a likely interest rate raise coming. On the gold side, well, that was the first signal, wasn't it? 2 weeks ago, that big breakdown when the market began to price in a raise of interest rates. That's why gold had that huge down day 2 weeks ago, and we haven't seen it bounce back. I actually thought it would bounce back a little sooner, but it really couldn't. It had, I think, one good day this week and then fizzled out, and it looks like we can probably go lower down into this range. Not a considerable amount of downside in the short term, but downside nonetheless, and could be the sign of longer term weakness. On the US oil side, we are having this nice little comeback rally. This came after word that OPEC would cut or not necessarily cut production, but limit production, and that motivated a nice bounce back. Well, we kind of broke that little upward trend on Wednesday of this week. Not a big deal. I think, though, that oil simply hitting some resistance here, it tickled through it one day and then has come back into it. I think oil ultimately is going to consolidate into a pattern, something like this, and just kind of wind its way sideways. On the longer term chart for oil, it's in this very narrow sideways range, condensing after all of this volatility there. All right, looking at the fear index, which is something very important to watch if you're worried about a correction. Now, I've talked about this last week. We've had all these falling tops, and they go back even farther. But this week, we've actually started to build rising bottoms on the fear chart. We haven't had that since way back in September. So this is a sign that we may be seeing a little bit of fear coming in the market, anticipating more weakness in the market. So again, another sign that you want to be cautious. So my ratings, I've lowered my long-term rating on US stocks to bearish because of that break of the upward trend line. However, it is still neutral short-term because we're kind of trying to stabilize, hold that trend line. So it's very tough to call this a bearish short-term chart just yet. That can change in a single day. Canadian stocks holding up better than the US stocks, neutral on both time frames. Gold, bearish long-term, neutral short-term as it tries to stabilize, but let's not forget that that upward trend line has been broken, and then neutral on both time frames in oil. Now, before we get to the trade of the day, just a quick comment. The important move this week is that the US stock market has broken its upward trend line, and this should lead to lower prices in the near term, motivated likely by the expectation of an interest rate raise. Bond market pricing that in for December, likely not in November. Gold is stalling in its weakness, but it appears poised to go lower. Oil stuck near the top of a sideways range and may get some short-term selling. I don't think it's going to be major at this point, but I do want everyone to note that fear is slowly starting to rise, and that deserves caution. All right, let's get into this week's trade of the week. And this one's interesting because I actually traded this stock twice, both on Thursday and Friday. So on Thursday, I bought it right there. Ended up selling it more or less at break even. I think I sold it a little bit early, maybe a couple cents a share loss. The following day, it started to meet my requirements again of one of my day trading strategies. So I bought it there and had a better run of it. Not a huge move, but still a move from, $1.62. It was $1.63 my entry, and closed the day at 196. So on a percentage basis, pretty good move. Interesting though that it was the same stock, and this is an important lesson. Don't hate stocks if they don't give you profits. I could have said I don't want to trade CTRV again. It was a dead stock yesterday, didn't do anything for me, because if the signal's there, the signal's there, follow it. I got a nice run out of CTRV the following day. All right, well, that has been the Stock Scores Market Minutes. Please subscribe to the Stock Scores channel. Click on the like button if you like it. If you have a comment, leave it. I'm happy to answer those. Have a great week in the market and trade well.